What's up, everybody? All right, so just as usual, we're going to do a quick portfolio update and see how we're doing compared to the market. I'll start by saying today is market's being pretty mean today. Today is Tuesday, September 20th. There's a big Fed meeting tomorrow, so I think that's why the markets are kind of wonky, a little wonky today. But yeah, for starters, it's market closes in just under an hour. We're down 2.73% today, which really stinks. But relative to the market's still down. We're down a little bit more than the market today. Market for the week is down 2.8%. We for the week are down 4.79%. So the market's beating us for the week. For the month, we're basically breaking even, down 0.62%. The market for the month is down 7.85%. So we're beating the market this month by quite a good chunk. The last 3 months, the market is up 3.13. The last 3 months, we are up 37.48. So we're definitely beating the market there. This is kind of cool. So Robinhood has added a year to date last rolling year, which is kind of cool. We were up as of yesterday, but today we're down officially. Same thing for the year. We were up. Oh, it's actually showing we're still up for the year, 1.29%. The market for the year is down almost 12%. So we're beating the market by about 13%, which is better than better than not being the market. So, well, I think I'm going to do something a little bit different today. So I just so you can see my trades a little easier visually. I've gone to some charts. So ChargePoint is a company that we sold. It looks like 2 puts on. Strike price at $16.50. We collected $42 total, which our return on investment is 1.27% on this one, assuming that the option expires worthless, but it's gone down quite a bit today. This is a daily chart. This is our strike price, so we're on the verge of possibly getting called here, but as of right now, it's still above it. The next stock is Ford. So Ford, we didn't necessarily do a wheel strategy on this one. We straight up just bought 100 shares and then sold a call. So our average price that we bought at was $15.48, and then initially we'd sold calls at the strike at $15.50. So the blue line represents our average price that we bought the stock for. And then this red line is our cost basis or our break-even point. And today Ford has taken a pretty ugly hit. So we're a little far away right now. So I think what we're going to do is just sell calls as long as we can. We do have a call currently collected $10, which is a 0.65% return based off of our initial investment. So that's not terrible. Still doable. It looks like there's going to be a little bit of resistance that it's going to be hitting around this area. So we're hoping that it'll bounce back up and hopefully we get good news at the Fed meeting tomorrow. So this is our trade with Ford, how that's looking. Next one is Penn National Gaming. Sold, it looks like 1 put at the 29 strike. We're still above that. Still on track to have that one expire worthless and keep the $24 of premium, which we collected, which is a 0.83% return on our on the money that we're putting up as collateral for this. Next stock is Rivian. This is a stock that I've been selling puts for quite a while now. It's actually been quite profitable at this point. So sold another put at the strike of $35. Sold 2 puts collected a total of $78. It's a 1.11% return on the money that we're putting up as collateral. So we'll see how this one goes. Black Rifle Coffee Company is one that we got filled. So we own shares, looks like 300 shares at $9.50. Our cost basis is $8.95. Again, our cost basis, this red line here is our break-even point. So it looks like it's kind of running away right now. Let's see. The next point of resistance might be around this area. I could see that easily breaking through that and kind of testing this low here. So it's another one we'll keep an eye on. And of course we sold calls on our 300 shares, collected a total of $45. And usually we're going to be selling calls at the strike price right here that we were initially called at. It's pretty risky to go any lower. It's something that I have done before and probably will do in the future, but I probably don't do this often because that actualizes your losses if you end up at the ends in the money. So yeah, sold calls at the strikes of $9.50. Collected a total of $45, which is a 1.58% return on investment. So that's pretty good, and that's based off of a week. So now Gap is a company that I am not super thrilled about. So this was a while back, so clear back, and it looks like November, we were called to buy 200 shares at an average cost of $24.25. We've been able to lower our cost basis a little bit, so that's down to $20.07, but the stock is all the way down to $9.19. And I'm kind of at a point now where I'm kind of thinking about just cutting cut the rope on this one and just actualize a loss. But I think the way that I'm going to do that is I'm going to be aggressively selling calls, which is what I did. So I had a call option that I rolled to the 12 strike, so about right here. Collected $24, which is about a 2% return, and that return is based off of the strike that we're selling calls at. So that's, in case you're wondering, that's how I'm calculating that. But collected a total of $24 there, lowering my cost basis just a little bit. And I think when we get closer to the end of the year, I'm going to be more aggressive selling calls at lower strikes, closer to the price of the stock. I think mostly for tax reasons, I'm actually either way going to end these sell these positions right at the end of the year for tax reasons. But so that's where we are here. And this one's pretty ugly. Some pretty heavy unactualized losses here, which stinks. And then another stock that has done that was a stock called Matterport. So around the same time, actually, just before the new year. This one's only 100 shares. We're called at $30. Our cost basis is at $24.68, and it's just kind of gone down and stayed down. So another similar situation as Gap. We're probably going to be a little more aggressive in selling calls closer to the actual price, so we can actually get some premium, work on lowering our cost basis as much as we can, and then probably plan on closing this position out just before the end of the year for tax reasons, which is what we did. So I sold a call at $4.50. Collected $25 on that, which is a 5.55% return. And again, that's based off of, that's relative to $450 essentially. So, well, folks, I hope you enjoyed this video. Like, comment if you want to see more videos like this where we actually go into the charts and show you, exactly where we are in the positions. I feel like it's a little easier to follow visually. My previous videos, we just kind of talked about it, and I think a lot of us if we're apt to looking at charts, are probably visual people. So I think this is kind of what I'm going to be doing moving forward. Again, if you want to follow my journey to growing my portfolio to $100,000, please like and subscribe. Thanks for watching.